Good afternoon, folks, and welcome to another episode with my man Richie Naso. Today, we're going to go ahead and talk about why most traders fail and what you should do instead. Richie, how's it going?
Yeah, going great. Thank you very much. Market is crazy, and I don't know. It's starting to remind me of the '99 bubble. I will tell you that.
That is,
And
yeah,
I don't have to read anything about it. When you live through it, again, it goes back to your gut and what you sensed and felt at the time. And I getting those feelings right now. Started yesterday.
well, that's the perfect opportunity for me to go ahead and put up the disclaimer that the opinions are mine strictly and Richie's strictly and not Trade Zero's. As always, we encourage you to do your own due diligence. We are here simply to talk about thought processes, ideas, and whatever experiences Richie has had. Now, Richie, I'm sure you weren't just born a profitable trader. You've gone through quite a bit. You've mentored quite a lot of individuals as well through their trading journey. So today's topic on how most traders end up failing and what to do instead is quite an important one. What would you say is like the biggest reason, right? Because we've all heard about the stats of 90% of traders go broke or they don't make money
Yeah,
or they lose or yada, yada, yada. What is it that you
yeah,
think these 90% of traders are doing wrong?
yeah. First of all, they're not limiting the downside. To me, they're not limiting the downside. They're not protecting their investment. They do not size down when things are going wrong. It's the same scenario we gave when things are going right. You increase your size,
Yeah.
okay? But you don't just do that. You have to put in your time so you have something to analyze, looking at your tendencies. So, you need to size down when you start to go off, and people go off. Professional athletes get off. They miss a lot of shots, or they make a lot of shots, or there's something in the middle.
Yeah.
There's nothing wrong with, there's nothing wrong with with sizing down, especially. That scenario comes up a lot after you're losing money. So if you're down two or three trades in a row, your tendency is to want to make it back quick. You got that? Make it back quick. When you try to make it back quick, instead of following whatever strategies you've developed relative to your personality, by the way, that's when you get in trouble. So there's always more than one meaning for sizing down.
Something that I have dealt with personally, and I've heard many other traders deal with as well, and type one in the chat if you've dealt with it, is say I am up $500 on the first trade. I'm feeling good. Then the second trade, I go ahead and lose $500. Then say the third trade, I go ahead and lose another 500. Now on the day, I'm down 500. However, what I will feel and what I will think is no, I'm actually down 1,000 because at some point I was up 500 and now I'm down 500. So I got to
Correct.
find a way on trade number 4, 5, and 6, whatever it may be, to make back the 1,000. And that's where the over trading comes in. That's where the
Yep,
going
that's correct.
leverage kind of comes into play. What do you tell those individuals though that kind of deal with the psychological of, oh my God, I got to make it back now?
Listen, this is no easy game, folks. Okay, it's no easy game. It's a union. It's a human tendency. If you lose something, you want to make it back. Whatever it is you're gambling on. If if you miss a shot, you want to make the next shot. And if you miss that shot, you want to make the next shot, and you want to shoot again, quicker, quicker, quicker. That is the wrong approach. You need to be disciplined and stick to the strategies that you've developed, that you've put the time into develop, and it's extremely important. So to turn around and try to make the money quick is fool's gold. It's just an accident waiting to happen, and it'll contribute to your downside for sure. Again, this is not easy, folks.
You say an individual kind of loses a trade. Everyone has a different type of habit that they like to go through. What do you personally do in today's trading atmosphere that you personally go through? Say you lose a couple of trades in a row. What do you do? Do you walk away? Do you close a monitor? Are you done for the day? What does Richie do when he has a couple of bad trades or a couple of trades that are losses?
Yeah. If I feel like my discipline was good with these trades, it's okay to lose money. Okay, you can lose money. That's why people who monitor their trading and look at their sheets and review their trading patterns. That's why most traders are in the wrong perception that you need to be 80, 85%, and that's going to be a good way to do it. That is not the way to look at it. 85%, it probably means you're not taking losses when you should. So I had a ridiculous day yesterday. I'm telling you all right now. I traded, forget about it. I mean, over 2,500 round trip trades yesterday. Okay. My winning percentage was 63.4%. I increased my portfolio well over 10% yesterday, but my winning percentage was only 63.3% of the time. Okay. And so why is that? Why is that? Because I limited my losses on the trades that I lost.
Yeah.
So if I lost 63, if I won 63 point, let's call it 64%, I lost 36% of the time. And if I lost 36% of the time, the key is to control those losses.
Mm-hmm.
That's why a percentage of 63, 64 is in the game, because it shows you that you've limited your losses. You cannot be afraid to take a loss. Big problem for day traders. And it's not easy to do. None of this is easy, folks. I'm sorry to repeat myself, but none of this is easy. Remember that.
When you say kind of limit your losses, are you speaking in terms of if a trade like you're like respecting your stop loss, or is there something else that you're referring to?
No, I'm referring to just losses you take on a particular trade, and not using a stop loss,
Yeah.
for instance. So I'm talking about trades where you're losing money or lost money, or can lose money, but just that voice in your head says, "Oh, wait a minute, no, I don't want to take this loss. I just lost this, or I just lost on this trade before that. I want to stick this one out. I know it's going to be good." Follow your patterns. Don't let this kind of thinking get creep into your brain, because it really does come down to your personality again, over and over again.
Yeah. We know that emotions come into play when it comes to trading, especially like we talked about. You take a couple of losses, you feel like you got to get written right back and always kind of get back to where you were at the highest level. How do you suggest individuals work on that psychological aspect of it? Is it through at the very beginning paper trading? Is it through maybe trading 10% of what they actually would be trading otherwise? Or is
Yeah.
it doing yoga in the morning? Like what do you kind of suggest to those folks?
Look, believe it or not, okay, paper trading is more for experienced traders. Why? Because you can put up numbers to test your resiliency while the market's trading. Okay, when you're a simp trader and you're inexperienced for the most part, you tend to hit that trigger, oh, look at the green, but it's not real. Okay. And so it is hard to put yourself in that position where it's live and real when you're on a simp trade. If you can manage that, and if you can do that, you will be way ahead of the game, and it will be very extremely helpful to you.
Yeah.
But the problem is getting overly optimistic when you're simp trading, and more inexperienced traders will do this. You get psychologically, ramped up, and man, I got this, and you go in like gangbusters when you turn your live account on, and all of a sudden the same mistakes show up. Why? Because a lot of the sim trades, or some of the sim trades you make, or a percentage of the sim trades you made, are going to be trades you're not going to make when the money's real. Yeah. And it's not going to be, you're not going to pull that trigger when your back is up against the wall. Sim trading has a useful effect. I do it sometimes on purpose to test certain scenarios and certain markets where I can ramp up, to test the amount of capital it will take to hold up my trading psychology in this particular pattern, like that.
When you see a trader start to kind of turn the corner, right, from losing to being consistent, what do you think is typically what like clicks for them, that aha moment? What do you feel needs to happen for them to feel like, okay, this is where I am good at what I do and I
Right.
can make this possibly a career?
Well, first of all, when you start along that path, it's not as consistent as you would like it to be. So there are going to be levels and plateaus that you are going to come against that's going to test your resiliency. Okay. So, when you start hitting two or three, it's just very simple. You need to be able to size down when you're on a losing, when you don't feel it, and you need to be able to size up when you do feel it.
Yeah. Now, is there another? So, how do you suggest to individuals that are currently failing, but it's been 6 months, right? So they've been trying to trade for 6 months. It just has not worked out for them. What kind of honest conversation would you have this with those individuals?
Well, I would certainly go over my sheets. I would certainly go over the trades that I made and try to come up with the reason. You will see if you put the time in, you will come out with consistency to the problems or to the reason why you lost money in each particular trade. Not easy to do because if you're looking at a number and you're looking at two numbers and you're looking at a P&L, it doesn't replicate the exact trading time. I know these systems. Some systems have, where you could replay your trades, but that is laborious to me. I've never done it. I won't do it. You can't make yourself nuts over this, folks, because it's unlimited, unlimited.
Yeah. It definitely gets a little bit tougher to kind of take a look in the mirror and say, I've been at this for 6 months. It hasn't gone the way that I would like. Am I just not cut out for this? I've got no clue in terms of if everyone can trade. It's all about discipline, strategy, yada, yada, yada. I've got no clue. I've got no stats on that. But, everyone kind of talks about having a plan and all that good stuff as well. What is your, and matter of fact, we may have to do this on a more invested topic next week, but I'll just ask the question now. What does your morning routine look like? Right. So the market's open at 9:30. I know sometimes you may be at the desk a little bit early, but what are you doing in the morning to prepare your charts, your monitors to come in game
Right,
face ready?
right. I carefully look at the overnight against technical areas. I look at the overnight. I mark the overnight lows and highs on my charts, and so I know where they are. It's significant. I peruse. I mean, I look at all these financials and the stuff that's going out on there, the news and stuff like that. I don't overthink all of that because for a day trader, it really doesn't matter. The only thing that matters is when they make emotional mistakes while you're watching. And so, what else do I do? I look at the gaps in the market. I look at where the gaps are. Where did the lows come in, and where is the top right now, and where are the gaps along the way? Where are the gaps along the way? So if the market's roaring, I'm looking for areas where it comes up near a resistance point, and kind of labor in there, and I'm looking at all these beautiful gaps on the way down.
Mhm.
Well, folks, algorithms and institutional traders, they know where those gaps are, and they hit those gaps. So I'm very cognizant of where these gaps are before the opening, while the market is traded overnight, before the market opens, and I'm constantly looking at it. I'm looking at where my charts are. I'm looking at where the Magnificent Seven stocks are. I'm looking at where the technical areas are, and I'm perusing, every segment of the market basically,
Yeah.
and I can do that in about 3 minutes, and then I'm done. Then it's an indelible picture in my brain.
You brought up gaps, and this is kind of one of the trades. Let me see if I can pull it up here. This is one of the trades that I was potentially looking at for a short, where this was Robinhood. It went ahead and kind of gapped down after a certain event that happened. I think it was their earnings. Yeah, it was their earnings, and it went ahead and gapped down. And just yesterday, it went ahead and closed that gap, and then today it's a little bit lower as well. So may have to talk a little bit on a different topic, a different day about. I didn't even share my charts. What a loser I am. Okay, here we go. This is where the gap down was, and they went ahead
Yeah,
and rallied all the way up, closed the gap
yeah.
here, and then they went ahead and opened today a bit lower after the gap was filled. Do you like to trade? I know what you typically trade, but when it comes to equities, are you a fan of gap and goes and different gap fill trades?
I absolutely love those gaps, and I'm sure if you overlaid that chart with Keltner channels, you will see those wicks down where you have that vertical line drawn. Um, you will see. I mean, I don't know. I haven't looked at this chart, but let's see. Let's see.
So it
Okay,
makes sense
so
here. Yeah.
look at that. Look at that gap down. Where did it go, folks? It went to the lower Keltner channel, a technical day trading area.
Hmm.
That's it. I mean, I would look at something like that. First of all, you should always look at the gaps down and gaps up. You should always look at those uh, uh, gaps,
Yeah.
and you should always pay attention because those are people. To me, again, on a gap up especially, those are people that come late to the party. Okay, those are bad sellers on the way down, and those are bad buyers on the way up. So you know, I mean, his chart tells the story right there. You see
Yeah.
that wick down right there. That wick down was right up against the Keltner, bottom Keltner channel there. So, yep,
Gap
yep.
trades is definitely something that I personally like to trade. So it's definitely good to kind of see it just randomly. I was looking at charts to kind of bring up an example, and I found one there. But I want to take well. Let me ask you your final thoughts on this topic, and then I want to get your insight on the broader market as a whole. But any other tips and tricks and insights that you have on why most traders fail and what they should do instead?
I mean, look again. I wrote 4 or 5 things down. Again, this is not easy. You fail to take small losses. Fail to take small losses. You don't. You can't. You are not considered a bad trader because you lose money on trades. You
Yeah.
can't. You don't want a high percentage. Um, uh, you need to control the downside. I mean, you need to control the downside. You just can't have this Pollyanna type attitude where you're not going to lose money and you're going to wait. It's hard to pull that trigger when it's a loss. Whereas if you keep it going, you know in your brain that there's a chance it could come back.
Yeah.
Well, guess what? That chance turns into misery most of the time, and you're up against the wall. That's why these people who turn around and you look at it and you say, well, if I make $100 a day times 20 tradings in a month, that's $2,000. That's pretty good. But what they don't understand is the losing trade will be double and triple what you have to make up. So you make $100, 4 days a week, and you're flying high. You're feeling great. You're on it. Oh, I can make 2,000 this month, and great, 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 wonderful. But what they fail to realize is that one losing day where you lost 400, you got to make up the whole week because
Yeah.
that's what you're up. So don't that kind of thinking is, not a smart idea to me. Um, I got something else for you here somewhere. Uh, you know, after a loss or a losing streak, you need to regroup. You need to go back and relook at what your strategy is, and always revolve around keeping things simple. Traders that go into many different patterns and change from week to week or month to month, it's okay to augment your trading style. It's okay to add certain things, but do those things begrudgingly. Take your time and let what you're thinking play out and then eliminate or add. Don't just go off half cock when you listen to this YouTube character say something. Oh yeah, oh God, and they're going to make you all this money, and I got this. Well, why aren't you doing it yourself? Okay, yeah, So I don't mean to be cynical here, but the point is that you get revved up by most of these YouTubers, and they're all out there. They're everywhere. I mean, every crack and crevice, they're everywhere, and everybody's got something to say.
Yeah.
And you want to be like a pinball machine and start to mimic some of the things you're hearing from week to week. You're going to get yourself in trouble. You need to have confidence that you can work. You can lose it. Use guidelines. You can use guidelines that you're hearing and absorbing the information, but to make a commitment to change your strategy often, it really is an accident waiting to happen.
Yeah. Uh, as we kind of divulge into the market as a whole, what are your thoughts as we've continued to make all-time highs? Today, obviously, we're pulling back almost a percent, 0.85% down on the SPY. What do you make of the broader market, and where do you think we go from here?
Yeah, I'm starting to feel like I felt in a 1999 bubble. All right, and you know, everything is good news. I mean, it's just beyond, and I don't know what other good news can come out here. I mean, I'm not a bearish on the economy at all,
Yeah.
but I mean, I don't know. I'm not a buyer at this market right at this level. I mean, there are basic holdings that are different. I'm not talking about that. For our purposes of trading and day trading, okay, I'm very cautious. I saw the short side of this market this morning early. What is it? Yeah. I mean, I saw it early. I really did. Why? Because the rallies, the intraday rallies were getting shorter.
Yeah.
So it means there was distribution going on. So every time you saw a bottom, the people make mistakes by trying to pick a bottom. But when you see the bottom stay up there, hold on right there, and you see it come up a little bit, you don't see them coming rushing to buy off a low. So those rallies gotten shorter from the beginning of this day, which is some of the thing I realized when I was preparing for the day. I haven't made a trade yet either, by the way. So, so again, again, uh, most traders don't fail because they can't trade. Okay, they fail because they can't manage the size during excuse me losing periods.
I agree. Yeah, they definitely don't have the emotional aspect of things in check, which then ruins things for their portfolio as well. Richie, always a pleasure. Thank you so much for your time, sir.
My pleasure. Thank you, Zinni. Thank you, folks. Have a great day. Thank you.
Absolutely. Take care. We'll see you next week. Bye bye.
Bye bye.